Hey traders, I want to share with you a long-term chart of basically the indices, and to share with you the reason why we will get a big stock market crash this year. Let's go straight into it. Do not place a trade based on what you're seeing in this video. Trading is risky and it can cause substantial financial loss. There is no guarantees of making money in the markets, and trading is the most hardest thing you will ever do, and it takes a long time to become a good trader. So this video is just educational only. If you're struggling with your trading right now, then click on the very first link in the description. We get learn a free training, the 7 universal laws to become a master trader that will boost your success, consistency, and confidence without spending a decade trying to figure it out. Click on the very first link in the description right now. Alright, hey traders, hope you're doing well. Let's actually get straight into it right now. I'm not going to keep this video too long, but I want to share with you guys a chart here. Let me go to the Dow Jones chart, and let me just bring up this chart here. Right? It's just basically a line chart. And one thing that we can see here on the line chart, let's go back to a bigger picture view here. Okay, so we can see that if we go, say, a monthly chart here, firstly, on a monthly chart, this is the biggest key out there that says, yes, we will get a big, massive stock market crash this year. It's going to happen. It's likely to happen. And yeah, it's basically going to happen. So one thing I do say is, the reason why I say that is because if you look at this chart through here, right, from this low through to high, you can see how that the Dow Jones is in a big vertical spike, and a 50 to 62% retracement is likely to happen out of this market through here. So, and the reason, and once again, the reason what you want to look at is you want to look at the vertical spike through here, and what goes up that quickly is now likely to be now likely to be retraced really quickly. Now remember, this is the long-term view. This is a monthly chart here. This could take 6 to 12 months for this thing to play out. You know what I mean? I do ultimately see this thing back down where Donald Trump was elected, which was the 18,000 mark. I do see that. I actually think a 50 to 60% retracement of the entire move is likely to happen. And if we go to the daily chart, weekly chart right now, what is happening on the weekly chart that we have not seen in a long time? What is that? And that is a clear lower high. So we have this high up here, and now on the weekly chart we're having this lower high through here, and now we're breaking down. Now the Dow Jones is the weakest out of a lot of the indices, and that's really a telltale sign that something is about to hit the market. Now, the reason why I say that is the Dow Jones and the S&P go in sync very closely with each other. But once the Dow Jones starts to lead away in a direction, either up or down, that's telling something is just not right. So right now the Dow Jones is a lot weaker than the S&P 500. The S&P 500, especially today when the market closed. Let me bring up, say, a daily chart through here. All right. So this is the Dow Jones through here. And as you can see, the Dow Jones came down almost to my trend line through here. But if I go to the S&P 500, you can see we actually had a lot stronger movement through there. This is all the way up here. And obviously the Nasdaq as well too. But the Dow Jones, as you can see, is come down almost to its lows through here. So the Dow Jones for me, and again, if you look at especially if you look at an hourly chart as well too, right? If you look at an hourly chart, squeeze it up, you can see how much this Dow Jones has come up, and look what's happening right now in an hourly chart. Now, if we go to, say, the S&P chart, this is the S&P 500 chart. You can see the S&P 500 chart looks very similar on the hourly chart, but we're just getting a little rally. Anyway, now, the reason why I say, yes, we will get a big, massive stock market crash this year is because that's the S&P 500. Let's go back to the Dow here. And as you can see, this is the weekly chart. And now we can see this is the, what we're seeing right now is the overall daily chart. And once again, we made this major lower high. And especially where the market closed this week, it's going to spell a lot more downside to come. Once again, something about to hit the mark where it's going to send this market down even more, and the market's looking really weak where we are right now. And if you go back to even things like the Nasdaq, yes, the Nasdaq has actually rebounded a lot higher, and we've closed a lot lower. But once again, even like the Nasdaq, when the Nasdaq drops, and as you can see, if you squeeze your chart up, look at this here. This has gone on further than the actual if the dot-com bubble was a dot-com bubble, and we know that, then look what happened after the dot-com bubble, right? So this is what's going to happen. This is what's it's 100% certain that this is going to happen. Now, we don't know when. It could take a couple of years for this thing, right? The dot-com bubble started at 2000, right? And it took two and a half years for that thing to retrace. So that's what happened. But you can see the very first move down here, right? The very first move down was a 30% drop, and then a rally back up, and then we had another big drop down through there. Now, what you can see on the Nasdaq through there, and this is the Nasdaq weekly chart, then Nasdaq's not really showing as much weakness compared to the other markets. But as again, this is the S&P 500. Look at that major lower high, and now we're breaking down. Now we are still making higher lows, and we need to break those as well too. Let's go back to that monthly chart as well. And once again, on this monthly chart, you can see how this big vertical spike, this vertical spike will be retraced. It just will be retraced. Every single bubble, and that's the reason why late last year I was doing Bitcoin bubble videos, because Bitcoin was in a bubble, and you can see what actually happened, right? I did one, I think, at 15,000, one at 17,000, I think. That was the last video I did. And then Bitcoin went up to 20,000, and then it just crashed 50% from there. So be aware, guys, that what we're seeing right now in the short term, you look at the candles like, oh, look, it's bullish, oh, look, it's bearish, oh, it's bullish, oh, it's bearish, oh, the thing is, what you want to do is you want to keep an eye on that weekly chart, that Dow Jones weekly, the Dow Jones chart weekly there, and that's what you want to keep. Spit it out, John. The Dow Jones chart is looking a lot weaker, and if we actually have a look at the weekly chart here on the Dow Jones, as you can see, right, we're getting this really big solid red candle, and this is different this time, isn't it? This is different this time. Because look what happened the last couple of times we had a big pullback. Look what happened the last couple of times. What happened? Sort of went sideways, and then we ran for almost new highs. Came back down sideways, and then we actually ran for a new high. So every time, or not every time, but every time, or likely every time we try to race for new highs, that's generally what happens, and it's called like a big V bottom, right? So what the market's done now is come rally back down and rally back up. It's struggling where we are right now, and that's a telltale sign there's a lot more downside to come. So this is a longer term view video for the indices, and once again, this Dow Jones weekly chart, but once again, the Dow Jones monthly chart here spells a disaster for the next couple of years in the markets.